I can't tell you how many times that someone has thanked me. Thank you for placing me with X company because they took excellent care of my family or my grandmother or whatever, versus somebody calling me saying, hey, I had to get an attorney involved. Like we had to sue them. They weren't covering anything. They're trying to deny my claim. I would say stop shopping on rate. I understand everyone has a budget. We got to be respectful of that. But at the end of the day, making insured with a strong, financially sound insurance company who has a great claims reputation should be of the utmost importance.
Welcome to the Homeowner Hookup.
Where we break down everything you need to know about real estate.
Straightforward, practical, and always up to date.
We're your hosts, Megan Huey
and Sydney Ragusa.
Let's dive in. Hey, Sid.
Hi, Meg.
How's it going?
Oh, it's going great. How are you?
Good. Today we have a very special guest, Justin Thompson. He is here with Brightway Insurance. He is a broker, and he's here to tell us all about how to get our insurance premiums down.
Yeah.
And talk Florida insurance with us.
I get asked that question a lot.
Yeah.
So
Yes. Thank you for coming on the show.
yeah, thank you for having me.
Yeah, awesome. So Sydney and I are just kind of going to bounce back and forth with some questions that we have for you.
Okay.
First and foremost, what would you say are the biggest misconceptions homeowners have about their insurance policies?
I'd say the biggest thing that most people think is covered is just being the fact that a homeowner's insurance policy, they assume that it's a warranty policy. So what I mean by that is the example that I've always given someone is, if your car, for example, you guys are realtors, so you drive 15, 20,000 miles a year, right? So, your tires are going to go bald or quicker than mine do as a commuter driver. So when your tires go bald and need to be replaced, you don't call State Farm or whoever and say, hey, I need new tires. They're going to say, well, Sydney, Megan, that stinks, but you need to go to Discount Tire, buy yourself some new tires. That's just the maintenance that goes along with owning your own vehicle. Same thing with homeowners insurance. So like people assume that just because the roof is older, they're trying to sell it, it's 19, 20 years old, or their HVAC unit is older, and it's starting to wear, water heater stops working. They assume that they just file a claim for that for homeowners insurance, but that's not what it's for. That's the maintenance goes along with owning your own home. So if the water heater needs to be replaced, that's on you. But if something happened to the water heater, like it burst, caught fire, caused damage, they're going to cover the ensuing damage to that, but you would still be responsible for replacing the water heater. Or if the AC system got struck by lightning, that's going to be replaced because lightning is covered under your homeowner's insurance policy. So I think that's the biggest misconception, is just assuming everything is covered at replacement whenever you need it to be replaced.
That makes sense. There's a very big difference between insurance and a warranty.
Exactly.
Okay, gotcha. Yeah, I could see where people would get confused with that or call you guys like, hey, come out and cover this, please. And you're like, you didn't change your AC filters for 3 years.
Yeah,
That's on you.
Yeah, and what's crazy is a lot of people will not just call me, they'll just call the insurance company, and that's the big no-no, because that, even if they don't pay anything, that claim is still on your record for 5 years. The same applies to auto insurance. So like if you just called and said, hey, what's my deductible? I think I have a little bit of water damage, and you have ServPro out there to dry it out, and it's $900, and that's beneath your deductible. Well, you're paying out of pocket for that anyway.
Right.
But now the insurance company was put on notice. That's going to be on your record for 5 years. So always contact the agent first to determine whether or not it's going to be a covered claim. Exactly.
Okay, gotcha.
So how do you explain the difference between replacement cost and actual cash value to clients?
So when it comes to homeowners insurance, whenever you get a mortgage, they require the home to have replacement costs. So, that's always going to be the case if someone's obtaining a mortgage, but actual cash value typically applies to a home that might be under renovation. Or, some policies have, if there's an older roof, they may have actual cash value or stated value coverage on the roof. But basically, in layman's terms, it just means it's a depreciated value on that specific thing. So, for example, your personal property coverage inside your home. So, these computers, these cameras, if this was your actual home and somebody broke in and stole all of this stuff, under most insurance policies, that's covered at replacement cost, or it should be. What they would say is, okay, Sydney, go to Best Buy and pick out this Canon or this Canon, and we'll replace it at a brand new value for you up to the policy limit. Whereas with actual cash value, they'll say, we know you bought that Canon camera 10 years ago. We know you paid $1,000 for it, but it's only valued at $150 now. That's what we're going to give you for it. So it's a depreciated value for everything in your home, down to your shoelaces. So that's really the difference. So when it comes to that coverage on a roof, that's the biggest issue there, is that's a depreciated value. A roof may cost $20,000 to replace, but if it's got depreciated value on it and it needs to be replaced because of a hail damage, they might give you $9,000 for it, less your deductible. So that's a big thing.
So speaking of roofs, Tell us what's going on in Florida right now with the roofs and the homeowners insurance. Because I know, isn't it like 12 years is where we're getting at now with roofs?
So I'll answer that in a couple parts. So if
Okay.
we were having the same conversation 5, 10 years ago, most insurance companies allowed up to 20 years an architectural shingled roof. Metal roof, it was like 50 years. And, flat roof, which is that rolled roofing material, most companies at that time were 15 as well. But because of the bad roofing actors, if you will, the last 5 to 7 years, they've kind of made the insurance companies become more strict on roof age. So, what I mean by that is you would have let's say, someone with an 18-year-old roof, storm comes through. These storm chasing roofers are pulling permits. They're driving around, seeing who's home. Then they're knocking on the doors saying, hey, we're down on Smith Street or whatever doing Miss Johnson's roof. We see you have hail damage. We know that you may not want to get on your roof, but we're more than happy to do that for you. They get up there and they say, yep, you have hail damage. We can put in a claim through your insurance company and we'll pay your deductible. And the insurance company comes out and says, well, it's just an 18-year-old roof that's not covered. There's no hail damage. So then that roofer is now suing because they have an attorney on retainer. They're now suing the insurance company. So it would cost them more to litigate to replace or to fight to put the new roof on than rather just put the new roof on. So the reason why insurance companies become so strict is because they have a target on their back with older roofs.
People take advantage.
Yeah. So that, and then rising reinsurance costs have made the insurance company say, okay, well, our reinsurance company is only allowing roofs to be X years of age. So we can't, go past that.
Okay. So that is the reason why they've brought it down to about 12 years. Is that right?
It's
When
like
I
12
say that?
to 15.
12 to 15.
And then even some, there's 10. And then some won't even allow a standard composition shingled roof, like that 3-tab shingle roof.
Yeah.
Which is crazy though. Most new constructions that I've seen, I mean, just as like national builder, kind of like not like high end homes, but just a standard built home right now are using 3-tab.
Which is wild to me because like I'm quoting one right now that's 4 years old and you could see it lifting. There's one that luckily I typed up a letter and saying this home's uninsurable, but from the aerial view on Zillow, it's completely missing all of its shingles. And it's a 3-tab shingle roof. Home was built in 2019.
Wow.
So those shingles, because they're 2D in shape, they're just flat.
Yeah.
They're easily lifting off the roof. And a lot of these builders are throwing up homes back in COVID times where so like if you look at it like this, you can see it lifting, you can see it curling, and an insurance company is going to cancel a policy like that after closing. So it's crazy to me that they're still using those shingles, especially in Florida.
Yeah.
Yeah, I mean,
think so
they're
too.
like it's pretty heavily being done right now, especially here on like certain. There's like 2 specific builders that are using them more
I know
often than
the
not.
builders,
But
yeah.
So, what are common gaps in coverage that most homeowners don't realize they have?
The biggest thing is flood insurance. So a lot of people,
Yes.
especially if you're from up north, they say, oh, my home flooded, and that's the common term. But if, let's say someone up north would go out of town and they're in wintertime and their pipes bust. Well, they come home and their home is technically flooded from that busted pipe. But yes, what was the cause of that? It was a plumbing related issue. So flood insurance is categorized by rising water that enters the home from the outside in, from the ground up. So that is a completely separate policy, not covered by homeowners insurance. So that's the one that most people assume is covered, even if a hurricane brings the rain, and that's why the home flooded. Oh, I have hurricane coverage, my home's covered. And it's like, no, your home was flooded from a hurricane, like Hurricane Helene in Milton and Tampa. That somebody would have needed flood insurance for their policy or for their home to be covered. Without it, they were, kind of up the creek without a paddle.
What about does mortgage, do they make them have flood insurance now?
No. So, well, actually, I'll answer that in 2 parts. So if a property's in a flood zone, like flood zone AE, VE, A, AO, those are required high-risk flood zones. So what that means is if you're buying a property in those flood zones, your mortgage company is not only going to require you to carry it, you're going to pay a pretty penny for it as well.
Gotcha. Okay. I remember we had used you for one in, I think it was Atlantic Beach, right? But
Yeah.
it was far enough back where it didn't need
Yeah.
the flood insurance. So that worked out.
Do you recommend, like, if somebody gets a home outside of a flood zone to still get flood insurance? Do you feel like the policy would help cover if anything were to happen?
Yes, and I'll tell you why. So a lot of people say, especially the older generation, oh, I've lived here, 30 years, I've never had a flood, but we recently saw what happened in Asheville. No one in their right mind thought flooding would occur, but it did. But Florida, if you think about it logistically, we sit on water as a state. That's the aquifers beneath us. We're surrounded by water on 3 sides. And then just here in North Florida, we have the ocean, the intercoastal, St. Johns River, all these man-made lakes and retention ponds. So it's definitely higher risk here in Florida than any other, in any other part of the country. So if it's within someone's budget, I would recommend getting it. I'm in northern St. Johns County and I have flood insurance. I'm not required to carry it just because I'd rather be safe than sorry. And most
Yeah.
of the time, flood insurance can be anywhere from $500 to $800 a year. So
Yeah.
Yeah, I'm in flood zone X. I'm down in St. Augustine, and I'm far enough inland that I definitely don't need flood insurance, but
Yeah.
I still have a policy. It wasn't expensive. I mean, I think it was $550 a year for me to have
yeah,
it, and it
it's
just
smart.
gives me peace of mind.
Yeah,
Yeah.
100%.
Is that something that you offer whenever
Yes.
you're going over homeowners insurance?
Yeah, usually what I'll do is I'll pull the flood zone just because sometimes you would assume a property's not in a flood zone, but it will be in a flood zone. Like,
Mhm.
a few years ago, FEMA updated the maps, but if like y'all know where Kernan is by UNF,
Mhm.
Yeah.
like the homes on the left-hand side, if you're coming from Beach Boulevard, a lot of those neighborhoods are in a flood zone. You're like, wait a second, that doesn't make sense.
Is there a creek back there or something?
There may be a little bit, but it doesn't make sense to me because then you'll have homes literally closer on like San Pablo and Hodges that
Right.
aren't in a flood zone. It's like, wait a second, they're closer to the ocean and intercoastal than this area, but I don't know, it just doesn't make sense sometimes. And then you'll have people on the ocean that aren't in a flood zone, and you're like,
Yeah.
that's wild.
Maybe like elevation or something. I don't know.
No, it's just how they determine it. I always kind of joke with people that FEMA, I feel like, gave a 2-year-old a box of crowns. And so the state of Florida said, okay, buddy, draw us the flood maps here. And they're just scribbling because
Yeah.
that's what, you'll have someone literally in a flood zone right next door. They're not in a flood zone. So,
Yeah, that makes sense. Okay.
Interesting.
That's the only way I guess you can make sense of
Yeah,
it, right?
yeah.
Mm-hmm.
Okay. All right. So everything going on in Florida, technically we would be a high risk state.
Mhm.
What about North Florida, our specific area?
So I say North Florida, we're kind of tucked away, knock on wood. I won't because we can hear it through the mics, but but knock on wood, we're kind of situated a little bit inland, and the way that not the Gulf Stream, but the way the coast hits, like you noticed Hurricane Matthew in 2016, it skirted us. Like it was about 60, 70 miles off the coast, but the way the water and the way that it comes up, we're push storms away. So I think we're lesser risk than places like, south, like farther south, like Orlando, because they're kind of in the center. So storms that come from, the Atlantic across are going to hit them still. And then a lot of these storms in the past 5 or 6 years are going around into the Gulf. And then they're hitting, if you remember in 2018 or 2019, you had 6 storms hit the Panhandle. So like back to back to back to back. So
Does that affect all of us though, as far as pricing?
yeah, because they look at it actuarially. So not just region by region. Obviously, rates are reflected on region by region, but the insurance companies as a whole will file rate increases based on loss ratios, rising reinsurance costs collectively across the state.
Gotcha. Okay.
Interesting. So, what steps can homeowners take to lower their premiums in more storm-prone areas? I know that you mentioned the Gulf. The Gulf, I feel like recently, in most recent years, has been getting hit way harder by hurricanes and major storms than the East Coast has.
Yeah, I would say, if your home is 2002 and newer, your home's required to be built with certain wind mitigation features because there was a building code passed in 2001 that said all homes 2002 and newer are required to be built with those, like the hurricane clips, the nail spacing, the secondary water resistance. All that's required here in North Florida. The farther south you go in Florida, it's a different type of code because if we all remember Hurricane Andrew in '92, so in farther south Florida, there's more stricter building codes as far as the roofing and the construction types go. But outside of that a home built prior to 2001 or prior to 2002, you'd want to get a wind mitigation inspection. Most of the time, you guys know as realtors that your home inspector will set that up for you, typically with the 4-point, but that helps lower the insurance cost because their home's going to have hurricane clips, things like that. Sometimes a buyer can put in the shutters, but they have to be permanently installed versus the ones that you just leave in the garage and then install them when a storm comes. That's not a discount. So basically, if they're permanently installed, that's a pretty penny to have done, but the savings on the insurance can be, $900,000 a year.
What about someone in a flood zone that puts the barriers up, like the permanent barriers? You know how most people in a flood zone before a storm get sandbags.
Yeah.
We've all filled sandbags at one point in our life before a
Yeah.
storm. So we have a customer that recently put the storm doors in. I don't remember specifically
The
what
ones
they're
that
called.
you saw like
But
in
you
Tampa.
drill into
Yeah.
the ground, and it goes deep into the ground, and then they set them in, and it's like a barrier. It's like a water barrier.
But
Does
it's
that?
something that they have to once the storm is gone, they take them out.
Yeah.
Yeah. So that would be similar.
But it's permanently drilled into the ground. Like the things are permanently drilled, quite like hurricane shutters or
Yeah.
the things are permanently affixed to the house, but you can take the shutters on and off.
Yeah, so like in that example, that wouldn't do anything insurance wise because
Okay.
one, it would be a flooding event, but because that's more so protecting the homeowner to taking precautionary measures as far as making sure water doesn't get in their home. So they're just doing that as an extra thing, but it doesn't affect the insurance anyway. That's smart though. I would definitely, if I was in a flood zone, I would definitely take that
Yeah.
measure for sure.
For sure.
I'm wondering how much they cost to get the permanent actual shutters installed, the ones that would give you the discount, and like at what point is it worth it?
Well, they're kind of an eyesore, to be honest with you. If you've ever
Yeah.
been in South Florida, you've seen them. They're
Oh,
a
yeah,
concrete
they're-
block home. It looks like an awning, a metal awning, and they come down
Yeah.
and then they latch on the bottom. So they're like these metal things on the outside of the window. So like here to me, that's an eyesore. But and if you lived in Miami, obviously Miami's great.
It's just
but
normal.
Yeah,
But
it's
it's
just
part of
just
the
it's
process.
normal.
I've
Yeah.
seen them on condos at the beach,
Yeah.
like the condos.
Yeah.
Some of them, they
The
have
high rises
those.
on the
Yeah.
ocean and stuff. Yeah.
Okay. What are the most common claims that you see in our area?
So I'm going to ask a question and then answer the question.
Okay.
So if I was to ask you guys, what do you think the number one type of claim filed in Florida for homeowners insurance is? What would you think it is?
Roof.
Flooding.
Flooding? Like flooding from like storms?
Yeah.
You're both wrong. So
Darn. We did
so-
our best.
Yeah. So it's actually water damage related claims. So when I say water damage, I'm referring to plumbing related issues. So like pipes
Oh.
bursting, slabs leaking, washing machine hose leaks, fridge hose leaks, pinhole leaks in the wall, a valve behind the toilet leak. Those are the number one claim filed, also the most expensive claim filed.
So that's also why some piping is insured and some is not. That's why people have to repipe their homes before they sell it a lot of
Yeah,
times.
like polybutylene is a big one that
Yeah, that's
it's
not
just
allowed.
like a massive red flag. And
Yeah, those were installed usually in the late 80s, early 90s, but now they're blacklisted. There's like one company that takes it, but it excludes water damage coverage until they're replaced. But the other one is like galvanized pipes. Some companies don't like those because obviously it's original from like the 60s and 70s.
like cast
and-
iron pipes.
Well, there's always going to be cast iron drain lines, which
Yeah.
is the drain line to the street. It's under the ground, or it's typically a cast iron is going to be beneath the crawl space. So most companies are okay with that because it's not part of the plumbing within the walls. It's usually the drain line that goes underneath to the street. So I mean, if something happened to that and it needed to be dug up, the insurance company's not covering that. So that's on the homeowner. So most of them don't care.
Oh, okay.
Hmm.
Interesting.
Interesting. I understand now.
I had to have somebody get their whole house repiped when they went to sell it. They had no idea. It was built in like the 70s, I
Yeah.
think. And we went to go sell it and then realized like, oh, the piping was not updated and she had to repipe the whole
I've
thing.
sold a lot of homes with polybutylene piping, and usually they don't even know. Like, I don't know if it was before the like insurance stopped
Yeah.
really insuring on polybutylene, but really over the last probably 6 or 7 years, it's been really bad. And they're like, oh, we didn't even know that we had polybutylene piping, and I'm like, oh yeah, you got to get it replaced, babe.
Well, I mean, if you
Yeah.
think about a home in the 90s, if someone, even 10 years ago, if I was quoting someone in the 90s, a lot of companies at that time weren't requiring a 4-point inspection unless it was over 30 years of age. So 2 years ago, if I'm quoting someone in 2000 or in 2023 and the home was built in 95, I'm not going to require, most insurance companies at that time wouldn't have required a 4-point. So they're not going to
Yeah.
ask, they're not going to ask for it or anything like that. So we wouldn't have, asked either. So we
Right.
would just issue a policy. But when someone's buying a home, in the selling process, they're going to have a 4-point. That inspector is going to then obviously notate, oh, it's got poly. That's an issue.
Mhm.
And then,
Mm.
knowledge of the agent is knowledge of the carrier. So now that the agent is aware, we got to put the insurance company on notice for the ones that we're quoting, and then that would negate coverage.
Right.
Yeah.
Yeah. So what other improvements or upgrades help reduce the cost of insurance? I know you mentioned the hurricane shutters.
Yeah,
Anything else?
the roof. So
The
I mean,
roof.
that's the biggest proponent as far as rating goes, like rates. So the newer the roof, the better the rate. So if someone has an 18-year-old roof and they're like, "Hey, my insurance is $5,000 a year," it's like it's probably time to put a new roof on because that
Yeah.
would decrease by half more than likely.
Yeah. And how often would you say people need to revisit their policy?
That's a tough question because like auto insurance is different. Usually I say auto insurance once every year, every 2 years. Most auto insurance companies, I'd say 2+ years just because they give a length of time you've been with your prior carrier. So if I quoted your auto insurance and you've only been with, let's say, Geico or State Farm for 6 months, I'm going to say, hey, let's wait a year or two because you're going to lose out on that discount, which could be 15 to 20% sometimes. But homeowners insurance is so nuanced that once you select a policy, if you're just shopping on rate, that's one thing, which I don't necessarily agree upon. But if you're looking at the strength of an insurance company, their claims reputation, how long they've been in business, then obviously you're, excuse me, making a decision based on that. So you should feel comfortable with that decision and know that unless there's some drastic rate change, I'm going to stay put with that insurance company because I made the decision based on those factors.
Well, I know for me, when I bought new construction, they go ahead and just like set you up with your policy and all that. And I
Mhm.
went to you and I was like,
Mhm.
hey, can you take a look at this?
Mhm.
And you were like, yeah, you're overpaying.
Yeah.
And you helped me out with that big time. But I wouldn't have really thought about it. I'm in the industry. So I was like, wait, hold on a second. That
Yeah.
seems high to me.
Yeah.
So that's why I sent it over to you.
Yeah, and I mean, a lot of times these builders, because obviously you did new construction, so the builder, some of these builders, I won't name them, but they'll have in-house insurance people, and they're just trying to make the process more streamlined. But sometimes it ends up messing it up because people aren't getting insured properly. They don't know who they're insured with.
They don't know. Yeah, we didn't know.
Yeah, they have no point of contact, and then they're quoting it improperly. So the reason why your rate was higher is because they had it rated as a protection class 10, which is like assuming you're more than 5 miles from a fire station and more than 1,000 feet from a fire hydrant. You're in a neighborhood with hundreds of homes, so
Yeah.
that's not the case. So just a quick look at that quote up front prior to that from a reputable agent, they could have
Yeah.
pointed that out, saying, "Hey, that's why the rate is so high."
And I think also with us, you were like, oh, you need like either Cody's name first or my name first. It like helps because one of us was like better to be insured or something. I
Well,
don't
yeah,
know
it's
how
like
that works.
like most insurance companies run what's called an insurance score, so it's like their own internal algorithm how they determine that. But it is a credit-based modeling system. So like when my wife and I bought our home at the time, I had the higher credit score. So on my policy, my name was first, and then when I rewrote it a couple of years ago, her name was first because she
Yeah.
had the higher credit score. So the rate was lesser based on that. So you're both listed, like the spouses will both be listed on the policy as named insureds, but it doesn't matter whose name is first. But if you get a better rate because of that, great.
Great. Yeah. Worked
Yeah.
out for me. I don't even know which one's first, but it worked out.
Yeah.
Also, with that, this was a question that did come up because one of our customers asked, do they run my credit? And they're really worried about that.
Mhm.
How does that kind of come into play?
So it's not a credit hit like it would be applying for a mortgage or a credit card. It's a soft hit. So very similarly, if you've ever gotten JEA or Clay Electric or whatever in your name, they typically ask for your prior address and your date of birth to determine whether or not you're required to put a deposit down. So same thing. So nothing shows up at all on someone's credit. There's no
Okay.
hard pull. So all we typically need is someone's date of birth and their prior address, and it runs it. I don't need a social or anything like that.
Okay.
What common advice do you think homeowners should stop following?
Going for the cheapest option.
Mm.
Looking at price. We've been made to assume price, 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 price. And unfortunately, in my business, there's a realm of insurance. There's a lot of agents out there that sell on price. And if I'm speaking candidly with you both, every agency who's a brokerage has multiple different carriers for the most part. My agency, Brightway, we're the largest agency, like brokerage in the state. So we have access to most of the property insurance companies writing here in Florida. But what they do, put someone's address into a comparative rating system, and that software quotes all the companies that agency has. And what happens typically is whatever one comes back with the cheapest rate, they'll send that. And as the saying goes, with any facet in life, you're going to get what you pay for, right? So most of the time, this process, someone's purchasing their largest investment that I've ever made. Why are we looking at the bottom line and saying, this is the most important thing?
Yeah.
Because if somebody, God forbid, had a claim, I can't tell you how many times that someone has thanked me. Thank you for placing me with X company because they took excellent care of my family or my grandmother or whatever, versus somebody calling me saying, hey, I had to get an attorney involved. Like we had to sue them. They weren't covering anything. They're trying to deny my claim. So I would say stop shopping on rate. I understand everyone has a budget. We got to be respectful of that. But at the end of the day, making sure you're insured with a strong, financially sound insurance company who has a great claims reputation should be of the utmost importance.
Yeah, you always, whenever I ask you for quotes, you always kind of include that, whether they have strong financials or if they don't, or, you're giving kind of a warning. But a lot of times it's a difference of like $20 a month.
Yeah. And in the grand scheme of things, that's not a whole lot.
Yeah.
But you'll also have a lot of like mortgage people because most of my people that I get referred to me are from realtors like you guys or mortgage brokers. And then it's common to like, if you guys work with one mortgage broker, but you guys work with me, but maybe that mortgage broker works with another insurance agent, then they're getting a quote, but then my quote's higher. Sometimes that can kind of convolute the process. But like you said, $15-20 a month is not a huge difference in the grand scheme of things. And if I'm speaking candidly, if you're making that decision on that minimal amount, then I don't think that buying a home should be in your just
It's a
because
very good point.
because you're protecting a several $100,000 investment.
Yeah.
And people are changing their decision based on $5 or $10 a month.
Yeah.
And again, I get everyone has a budget and we have to be respectful of that. But like I said, I can't tell you how many times that I've gotten phone calls in nightmare situations where someone's like, please get me out of this. Please rewrite my policy.
Yeah.
Whatever. Please change me to your agency.
That's such a good point. I didn't even really think of it that way, but you are right. Like
Yeah.
maybe this just isn't the time if
Yeah.
that's the most important thing.
Yeah.
Yeah, that makes sense.
So, speaking of rates, do you have any projections of what rates may do over the next 1 to 3 years? Disclaimer, none of us have a crystal ball. We do not know this 100%.
Yeah.
We're just following trends and predictions.
I think they'll come down. I don't know how drastically. I do think that they've leveled out in a sense that 2019, 2020, 2021, we saw an extreme spike, sometimes double the rate increases amongst a lot of these insurance companies.
Do you think that's due to storm activity? And do you feel like that could change based on storm activity over the next few years in Florida?
Yes, it also had a lot to do with reinsurance costs. So I'll explain to you guys what reinsurance is. So let's say your insurance company, I won't name them, but let's just say your insurance company. Let's say they have $75 million in their own personal bank. If you had a fire to your home for $30,000, well, they're going to pay that $30,000 claim from that $50 million in the bank. But if Hurricane Justin comes through and causes mass catastrophic damage like Irma and Matthew did in 2016 and 2017 and caused $150 million of losses to their book of business, if they had to pay that from their $75 million bank, they would go bankrupt. So would every insurance company in Florida. So what they do is they purchase reinsurance through Lloyd's of London, Swiss Re, and they pay exuberant amount of premium each year for those policies. It could be $10 million, $20 million in premium. And then when a storm comes through, they pay a large deductible of $5 or $10 million. And then the reinsurance company like Lloyd's of London comes in and pays all the catastrophic hurricane loss claims for that carrier. So reinsurance costs are on a global scale. So all the stuff that happened in Australia, 10 years ago, the fires, the stuff going on in Europe and Russia, all that affects reinsurance costs. So when those costs go up, the insurance company obviously has to find the capital to purchase it. So then they trickle those rates down to the policyholders. So that 3 to 4 year period in 2019 to 2023, you saw a drastic increase because reinsurance costs went up by quite a bit, sometimes double. And that's why a lot of companies went out of business as well, because they couldn't find the capital to purchase the reinsurance.
Okay, with that though, is that why people are saying that insurance companies are leaving Florida?
Yes and no. So the rates, and I'll kind of just in the tail end of that answer, reinsurance costs are directly affected from catastrophes. So because we had there was no hurricanes for the first time, I think, in over a decade, that a hurricane didn't affect Florida in any way. I think we will see a leveling out as far as insurance goes. There were 4 or 5 insurance companies this fiscal year that actually took rate decreases for anywhere between, it's crazy, but 0.5%, 3%, so a very minimal amount, but they are decreasing. There wasn't a 20% increase or anything like that. There's other companies that have come into the marketplace as well, but I'm very weary on just jumping on ship or board or however you want to word it with a new company until I see how they handle things financially and claims wise. But to answer your question, Megan, yes, that's why a lot of companies left the state, because they basically were undercharging for rate. All these companies like Florida Specialty, Gulfstream, all these companies were significantly undercharging for rate or risk that they couldn't afford the financial stability or to purchase reinsurance to maintain their financial stability. So they just went under. They went bankrupt.
So then across the country, we follow Market Distillery. Not sure if you
Alex
follow him.
Stewart.
Yeah. He was saying in a class within the last 6 months, I think, he was like, it's not really just Florida where rates have increased. It's kind of
Across
everywhere.
the country.
Yeah. Is that true?
Yeah. And I mean, for perspective, Nationwide is a company that we represented, but they, about a year ago, put out a notice that they stopped writing all lines of insurance, personal lines insurance, not just in Florida, but in the entire country. Even though we still see commercials for them, they're just doing business insurance. That's it. So that's kind of indicative to me of how the insurance is nationally. So
Mhm.
obviously we saw everything with the fires in California with State Farm, and they're a very good company. I won't really go into detail on that, but I think rates are increasing because risk is increasing. So all these insurance companies have actuaries that they like how they look at rates and determine them. So where are they competitive? Where they want to remove themselves from. Florida obviously was one of those first states that was on their radar. Like, we got to get out of here. That's why.
So probably Florida, California, Tornado Alley,
Yeah. So
maybe
I mean,
even stuff up north.
yeah, I mean, like in the Tornado Alley area, a lot of the companies out there don't even cover roof damage, or they do it. All policies are actual cash value on roof damage because there's so many hailstorms and tornado storms
Yeah.
that damage roofs. I mean, you can
Yeah.
have 6 hailstorms in one fiscal year in Dallas.
Yeah, we think Florida's crazy. I feel like that would be crazy.
No, I know. It's literally so funny. I had someone that relocated from Tornado Alley,
Yeah.
like in Kansas, and they came here and they were so worried about insurance and hurricanes. I'm like,
Yeah.
You can't
what?
remember- Yeah.
I was
You
like,
can
you
prepare
just,
for 2
I'm like,
weeks
you
for it.
literally have
Yeah.
sirens that go off at a moment's notice
Yeah.
for something catastrophic, and like you're worried about hurricanes. I'm like, we got a week. We got
Yeah.
a week ahead, babe. Like
Yeah.
we know, and half the time it doesn't even hit us. I'm like, you see these spaghetti
Yeah.
models? Like we are like. We're in a few paths, but like you don't need to be as worried. I'm worried about
Yeah.
you.
Yeah.
Like-
I need to ask my sister what her policy is like because they're in South Carolina.
Okay.
And I feel like every time it misses us, it goes straight to
the
them.
Carolinas are.
Where in South Carolina?
Charleston.
Okay, yeah, my wife and I love Charleston. Like, so like obviously that's prone to flooding, but I mean the Outer Banks, that whole area will get hit constantly. So
Yeah.
so there's a Brightway agent there that I refer business to for customers that are buying properties in South Carolina. So they're limited in that area as well because some companies have just said, hey, this is too risky in this
Yeah.
specific area or zip code based on our models.
I
Yeah,
would
my
think so.
brother and his wife, they live in Japan now, but they own a home in Emerald Isle up in North Carolina,
Yeah.
like not far from the Outer Banks. And their policy after last year with everything that happened, and they're not close to like Asheville or
Asheville, yeah.
anything, but after everything that happened, their rate like almost doubled.
Yeah, I just think people.
Sucks.
Yeah, I mean, the example that I've given people the last few years as far as rate goes is my wife and I's first home that we bought in 2013 was a brand new construction 2013 home. When I wrote the insurance, that premium was $562 a year for a 2013 home, which
gosh.
is crazy low.
Yeah.
When I sold that home at the end of 2019, that same rate was $1,600 a year.
Yeah.
So like people have to understand, like we live in a state that's compromised by like a lot of weather issues and risk, and so you can't expect to pay $500, $600 a year sometimes for your homeowners protecting a several $100,000 investment.
Yeah.
So
Yeah.
I will say though, weather-wise, at least us, we don't get it as bad as South Florida,
No,
the
I would-
Panhandle, and all
Yeah,
of that.
no.
I would hate to be an agent in South Florida. It's
Yeah.
it's cutthroat, but rates. I mean,
It's
just
volatile.
it's
Yeah.
very, and
Yeah.
usually the only company that most insurance agents are writing with or people have to go with is Citizens, which is the state-run insurance company, because no one wants to write down there. I mean, for perspective, your home, you took that same home, you put it in Miami or Fort Lauderdale, you're paying $12,000 a year,
Yeah.
which is
That's
crazy.
insane.
Yeah.
Which also, if you think about picking up my home and putting it in South Florida, it would also be like 4 times the price
Yeah.
of what
Yeah.
I bought it
Yeah.
for.
It would
Yeah.
also
So I guess it's
probably blow
relative.
away.
Yeah, that's
like
true.
everything down there is all like it's a concrete block.
Yeah.
Yeah.
I mean, especially
and it's
after
building code.
Andrew,
Yeah, it's
like
building code.
yeah.
I mean,
yeah.
there were sticks. I mean, there was this huge thing that Matt Carlucci in my office, we read about a few years ago, and it was like basically after Andrew, all the homes were just like sticks. Like there was no like structural like wind mitigation protection required. So it's like when it came through Homestead, it just like everything just fell over, like
Yeah.
just literally like sticks.
Wow.
Yeah. My parents lived down in Fort Lauderdale during Andrew, but they were helping rebuild one of my aunt and uncle's houses down there. And at the time it was like a little 1-bedroom, 1-bathroom, like tiny little cottage right off the water. But luckily it was concrete block, and they were like stuck there, like stranded, because it was one house over from
Wow.
deep water canals, and like they were just stranded there for like 2 weeks.
Wow. Yeah.
So,
Wow.
That's crazy. I have a
Yeah.
friend who her parents had a house in Clearwater, and when the really bad hurricane came through, he had canceled his policy
Last year?
like 2 weeks before. Yeah.
Oh, wow.
Yeah. And had to like basically rebuild the house himself. Like I was like, why did you?
Why would you
the
cancel your policy?
I don't
Just
know.
assume, I mean, some people when they don't have a mortgage are just like, I'd rather self-insure. And
Yeah,
it's like,
yeah.
what's nothing's ever happened, but I'm just like,
Right.
It's
it's that
wild. We
one
know
time.
someone also, like
At one
currently a
time.
client that is literally on the ocean that doesn't have insurance because they bought it cash. I can't say his
Oh.
name on here.
Is it a
Yeah.
condo or a house?
No, it's a house. It's like a
wow.
multi-million-dollar
Oh my gosh, he doesn't.
home.
Eee.
Mm-mm.
We need to put him in touch with Justin.
I
That's
have put him in
crazy.
touch. Actually, I have put him in touch with Justin. I think I've put him in touch with like 5 or 6. He just won't do it himself.
Mm,
Mm.
that's crazy. Wow. That's wild. If someone is coming to you and they're like, I need homeowners insurance, like Megan and Sydney referred me to you, what are the steps that they go through from kind of start to finish?
So usually what I do, if someone's actually calling me or they email me, I'll ask them some questions like their date of birth. Do they have any dogs? Just because the breed of dog, a lot of companies don't take pit bulls or Rottweilers, things like that. So prior claims, if there's any inspections, and then from there, within a few hours, I'll quote the companies I feel that this home would be competitive with. And as I mentioned earlier, most agencies have a rating system. They just plug the address in, quote all these companies. But I've been doing this long enough where I know, okay, this company's going to be competitive. This company's going to be great. I'm going to send these 3 or 4 different options to them. And then obviously I'll send that detailed email as I normally do, kind of breaking down the companies I've quoted, their financial strength, how they are with claims, what's required, if no 4-point is needed or just a wind mitigation inspection is needed. And then once they have time to review and digest that email, we can have a phone call. I can go over those questions that they might have. And then from there, get the policy set up if they decide to move forward.
So getting the policy set up, what does that entail?
It's honestly very quick and easy. There's not much. I mean, some companies, if there's like a prior claim on the property, may need to, like the underwriter may need to review the inspection or take a day or 2 to review all of that. But if it's just cut and dry, if it's, let's say, a brand new construction home and they give me their mortgage person's information, it'll take me 30 minutes to actually issue the policy, go through the application, and send everything over to the mortgage person.
So are they paying that policy directly, or is it going through the mortgage company?
It's typically if someone has an escrow account set up with a mortgage, which 99% of people do, because the mortgage company wants to make sure the taxes and insurance are paid each and every year on time. So they're going to likely have that escrow account set up. So it'll be included in their total closing costs. So what I typically tell people is, especially a first-time home buyer, is if like your closing costs are 30 grand, well, a portion of that 30 grand is going to be, let's say your insurance policy is $1,000 a year, is going to be that $1,000. And whenever you go to wire that money to closing to the title company is going to use those funds to write a check off to the insurance company and mail it for you. And then starting day one of someone's first mortgage payment, they obviously have, let's say someone's mortgage payment's $1,000 a month. Well, they have the principal, the interest, and then they have that escrow account, as you know. So each time someone makes a mortgage payment each month, a portion of that goes to the interest, a portion of that goes towards the principal, and then a portion of that is going to the escrow. So at the end of the year, just by making their mortgage payment each month, whenever that's due, the taxes and insurance, the mortgage company pays that for them.
Okay. And what if someone is switching over? They're calling you, kind of like what I did.
Mm-hmm.
Hey, Justin, take a look at this policy. This is my address. Da da da. What's the process from there?
So
if they
from
wanna
there, there's a
switch?
little bit of extra legwork that the homeowner would have to do because they're switching midterm, especially changing agencies. So I would get the policy set up. I'd send them an email and say, okay, the policy's been set up. We've updated it to like lender doc or whatever. You need to call, let's say it's with Wells Fargo. You need to call Wells Fargo to authorize the change in insurance and then for them to send payment. And then depending on the company who they're previously with, they would reach out to that agency to say, hey, I need to cancel my policy.
Mhm.
And then from there, they would get a refund check, 2 or 3 weeks later from that old insurance company. And then they would just need to make sure they deposit it back into escrow so there's no shortage on that account.
Okay, so this is where I'm like, what's the wildest or most memorable claim situation you've had to handle?
So luckily, I don't have any wild claims. I think that's a good thing.
Yeah.
But I do have a pretty memorable claim, and I say that because it was one of the first big claims I was ever a part of. So it's probably the end of 2011, beginning of 2012, when I recently started at Brightway. So we had this big doctor insured, and he lived on the water, and somebody set arson to his home.
Oh, wow.
Yeah, like somebody's camera, it wasn't Ring was out then, but it was like somebody's camera from like 82 or whatever was pointing to his house, and they saw the person do it, and then they basically went back out of the house and then went into the water somehow and did. But anyways, the home was catastrophically damaged, and it was a 20,000 square foot home, huge home. And obviously it's on the news. Then there's a fire. I mean, there was these fires recently from the little cold spell we had. They're always on the street. So like thieves will watch that and then at nighttime come out and kind of loot the home, especially in that affluent area.
Yeah.
So it wasn't in a gated community either. So anyways, the neighbors, and this was an elderly gentleman. I mean, he had just retired, so he was, I wouldn't say elderly. I mean, he was like probably 75, and they went and stayed in a hotel. His neighbors were younger guys, and the company that we had this gentleman with, one of the longest standing companies in Florida, very, very strong financially, wonderful with claims. But the neighbors were younger guys, probably in their 20s, and they said, hey, look, we know that people are going to come out. What we're going to do is we're going to sit in your yard and camp out for the night, or however long it takes until the adjuster gets here and, the police or whatever. So, because the police aren't going to stay there all night.
Yeah.
So lo and behold, 2 a.m, 3 a.m, guess what pulls up? The lights off, mask and everything, try to come in.
Oh, wow.
And these men almost like protected this individual's house. Well, the insurance company found out that they did this, and they did it for like 3 nights. And they basically gave them, the insurance company, they gave them the amount of money that would have cost to stay at a hotel, each individual. Like they wrote them a check.
Wow.
So-
That's really nice.
Yeah.
I would
So-
not expect that.
So not only did they do that, but like they're not even the named insured. They just knew that like more losses would have occurred, more
Yeah.
like more
I was going
payout.
to say
they would have.
financially, it makes more sense for
Yeah.
them to do that.
But they didn't have to do that.
Yeah,
So,
yeah.
which I thought that was really cool. So,
yeah.
Yeah.
No, that's awesome. What
Yeah.
company is that? I'd love to.
Yeah, that is awesome. But I
Yeah.
feel like it's all about money for insurance companies. I mean, come on. Like, let's.
Well,
let's
I beg to differ on that. I think there's a love-hate relationship. I think with insurance, health insurance, that's a different animal. We don't deal with
Yeah.
that. But homeowners insurance, I definitely have a affinity for it.
Do you strictly do homeowners insurance?
No. So our agency, we're a broker. So we represent obviously, most of the homeowners insurance companies in Florida. And then we represent about 20 different auto insurance companies. Like I can name like Progressive, Geico, Safeco, the Hartford Travelers, and a few others. And then we do boat insurance, some business insurance, depending on the risk, flood insurance, obviously. So pretty much all personal lines insurance with some business, sprinkled in.
So people can call you for pretty much anything
Yeah.
for the most part.
Yeah, I mean, Joe Carlucci and Matt Carlucci in our office, they handle most of the commercial. That's kind of their realm, and they specialize in that. So if someone needs like, I just got a quote request yesterday for a 20-unit apartment complex in Gainesville, and I was like, here you go, Matt.
Yeah.
So I mean, just because he can knock that out of the park.
Nice.
Yeah.
Okay.
So if you could give homeowners one piece of advice that would save them stress and money, what would it be?
So I touched on this earlier. I would say stop looking at your cost or stop shopping just based on rate. Look at the length of time that the insurance company's been in business. Don't necessarily look at Google reviews about insurance companies, because I think the problem with people just going off of reviews, some of it's bot stuff, especially for like larger companies. But insurance companies don't look at Google reviews, because typically what happens with Google reviews is, especially on homeowners insurance, is something hit the fan, something wasn't done right. Somebody thought a claim was, like, for example, earlier in the conversation I mentioned, somebody wanted to replace a water heater that's 19 years old and it wasn't covered. And it's like, they're going to complain about that. It's like, well, that's not covered no matter what insurance company.
I feel like more people have to leave a review when they have a bad experience versus when they
Yeah.
have a good experience.
We used to
Honestly,
like beg people, like, hey, don't forget, give us a
please
review.
give us a
Yeah.
good review. Like,
Yeah.
or actually, no, just give us a review. If it was
Yeah.
good, bad, the ugly, like,
Yeah.
Yeah.
And
but make it good
Yeah,
because we
so-
know where you live.
So I would say research your insurance company, find an agent that you enjoy talking to and that you can trust and that's knowledgeable, just because at the end of the day, your agent is going to advocate for you, or should be advocating for you. He's going to be your voice of reason when you think you should file a claim, or if you think you need to file a claim, he's the person or she's the person that you're going to call to ask that, versus just someone that's in a call center type environment that's just you're the next call coming in, and once they write you a policy, they're done with,
Yeah.
So I would say make a decision based on that. And then, obviously, as I mentioned, everyone has a budget. We need to be respectful of that. But if you can make a decision based on those factors that I mentioned, I think your life would go a lot smoother in the instance a claim does occur, or if the marketplace is volatile and insurance companies start pulling out of Florida or going out of business, the fact that you're with a strong insurance company, that's not going to happen. So you don't have to worry about that.
Yeah. Very good. Well, we appreciate
Yeah,
you
thank
coming on
you.
the show
Of course.
today. I
Of
feel like
course.
we hit all of our top questions.
Yeah.
Can you guys think of anything else that anyone would want to know about, or maybe that you can think of don't know about?
Let me just look at some of these here. I mean, I think you answered, honestly, like I said, most of these questions. You guys did a great job, teeing it up for me, if you will. So
Yay.
Yeah, no,
Awesome.
I think
Yeah.
this is. I think we've hit
Super
on pretty much everything.
informational.
Yeah,
Yeah.
yeah,
yeah.
Thank you so much. We
Yeah.
Justin,
appreciate
appreciate
you.
yeah,
it.
yeah. Thank you for having me on.
Everyone reach out to Justin for any of your insurance needs. I didn't even know you did auto, so
Yeah.
I'll be contacting you. I have a
Same.
teenager coming on, so
Same.
literally
That's
this
gonna
week. So
Really? Yeah.
yeah.
I'm
yeah.
sorry.
All right. Well, thank you so much.
All right,
Thanks,
Thank you.
Justin. Bye.